Hey, good morning, everybody. Welcome to our Friday edition of the Morning Vol Report from OptionPit.com, your home for option trading and education. If you want to learn how to trade options, you just probably should come here. We've got I think we have a pretty good list of people that would tell you the same way, mostly our clients. Anyway, our income masterclass on selling options. We will start from the lowly credit spread and really analyze and see how to place what we'll just say income trading is basically, people selling options. What makes it good? What makes it bad? Also, how to manage, how to exercise risk control for these types of things. It will be taught by that handsome fella there, Mark, and it will be taught by the more handsome guy there, me, Andrew Joe. It'll be 10 classes, hour to an hour and 20 minutes for 10 weeks. All right? If you're an Option Pit subscriber, you get this class for an extraordinarily low price. All right? And with that, let's talk about this. Just a little sideline. Interesting note in Zero Hedge for all of you who like to read this. An interesting reason on what's going on here with the VIX. I can shorten it for you, but it's nothing that I do not think is going on. Basically, what's happening? Ultimately, what's happening, as an option trader for a while, as a market maker for a very long time, we don't have any realized vol. And ultimately what happens is, without any real movement, it's hard to own options. If it's hard to own options, liquidity providers, choke on premium, and vol comes down if they have to buy more. That's the dynamic. I don't think it's changed since I started, and it didn't change before I was here, and it probably won't change after I'm gone. The 10-day realized vol at 3% is amazing. The 60-day realized vol at under 7, also amazing. We did get a little lift from the news, the Washington news. Every once in a while, this Russian thing rears its head. I don't know what the latest news is or where the investigation is or any of that stuff. But we did get a move up in volatility yesterday, and we were looking for ways to price to take advantage of that using VIX options. If you're not in our chat room, you missed it. However, we have a solid dollar of premium here. I think this May future was trading around 12 yesterday. The June at 12.5, I would say this is about fair for where we are for VIX. And don't be surprised if VIX goes lower. Okay? Don't be surprised if it stays in the 9 handle for a while. We have had periods of, basically if the market looks forward and says, okay, we don't see a lot of problems on the horizon, vol goes down. As strange as all the news coming out of this current White House is, for whatever reason, it's created a vol dampening effect. Even though the economic policies, all these things, for whatever reason, people are bullish. There's no real central bank involvement anymore in the U.S. They're mostly trying to unwind their stuff. Don't know what that's going to be like yet. The Europeans seem to be running out of things to do, although Japan is still trying feverishly to do this. Ultimately, I think G7 debt will be a problem. Probably not this week and probably not next week, depending on policies. If policies become better, it won't be a problem. If they get worse, it will be a problem. As far as equities go right now, companies are making lots of money. You look at growth companies like NVDA, which really were struggling for a while, but no longer. Their chips are everywhere. And for the extraordinary growth for a hardware company. This is one probably to watch. It wouldn't surprise me if we go a little higher. I think it's probably going to make a decent put spread selling candidate, something like that. Mostly just because it's had such a rocket ship run, about 25% or so in the last 4 or 5 days. Looking ahead, right, you're not seeing much out of gold. What you are seeing is they are still loving the stocks they love. Amazon, again, is kind of march back. Apple continues to march. Because Apple for the longest time really had no multiple. It was a multiple of more like a hardware, a utility. It was trading at what, 7 times earnings, and they were sitting on a mountain of cash, and then all of a sudden they've given it a multiple. Now it's more like 14, 15 times earnings with the cash. So there's a little bit of growth multiple attached to it. It's not even outrageous. I mean, based on all the dough that they make. Again, the always assumption is if they can't follow the iPhone up with something, they're going to have trouble. So they haven't done it yet, but they just sell lots of phones. But be that as it may, a market at the top, QQQ close to the top. What I would look for now is some stocks that are still kind of on the mend. So mostly we're looking for things like that. A couple of interesting ideas. Of course, my favorite stock that's always on the mend but never goes anywhere is Twitter. Implied volatility, extremely cheap in the 30s. We've looked at VRX as well as a company that could be on the mend. Again, I think implied volatility there relatively inexpensive for the type of move that there is. Thirdly, I would say bank stocks. I said a lot of long-term call buying and a lot of the bank stocks like Bank of America, Goldman, people moving into longer-term longs, taking advantage of the low volatility and just buying calls in the long term. They just don't cost that much. So I think this is a good opportunity just to be long vol, long gamma, basically because we're going up. It's a bull market. It hasn't gone away yet. I think buying short-term options is very difficult. I think buying longer-term options at this point is much easier. So those would be the things that we focus on at Option Pit. And if you're looking for VIX to go up, I mean, at this point we need something. Some big negative news has to happen. That could always happen overnight, any day. But current trend-wise, you could see a summer of 10 VIX pretty easily. I will say, lastly, too, is the term structure overall. It started getting very cheap I would say, about 6 weeks ago. The September future has basically stopped moving down. It hasn't really moved down in the last 2 weeks, I would say. Both Sep and October kind of hanging here. So when we look at that, I just think it seems like that's about the end of the road for those as far as where they go. And, of course, once they get closer to the cycle, I would accept them to go down. But I think that's what we got. Those are the themes for the day. And we'll see if we can get any action out of it. And with that, I will see you all later.